Mega cap tech earnings on deck tonight. Alphabet and Microsoft after the bell. Deirdre Bosa has what to look for in the prints on today's Tech Check. Hey, Dee.
Hey, Carl. Good morning. So let me start with this chart. It's Microsoft versus Google this year because I think it says a lot about where these two companies are at as we head into earnings. Microsoft was the early generative AI winner, in large part thanks to its deal with OpenAI. In January and February, the first part of that chart, it outperformed as Satya Nadella said things like he wanted to make Google dance. Google, however, answered that call, came out with its own suite of generative AI products. And for a while, as you can see in the middle part, their stocks were neck and neck performance-wise. Then second half of the year hit and the air came out a little from the AI bubble. Treasury yields rose and core, currently cash flow generating businesses, they have now taken the focus. For Microsoft, that is PCs, enterprise software, and cloud. For Google, it's still advertising, and that's where we are right now heading into their latest reports. At Microsoft, AI has the potential to bring in billions of dollars from enterprises, but as CFO Amy Hood said on the last earnings call, that's not really going to happen until early 2025. Cloud, meanwhile, has seen growth decelerate, and some concerns are building around IT budgets in the year ahead, so that's going to impact the stock now while AI is further off in the future. Now, Alphabet, on the other hand, is what Bernstein called earlier this week the warm hug of mega cap earnings. Its advertising business still makes up nearly 80% of overall revenue, and it's been more resilient than those at Meta and Snap. So sure, search could be disrupted by generative AI sometime in the future, but Google has convinced the street that it's on it. So in that sense, you could call Google really the personification of GARP, growth at reasonable price. 10% top-line growth expected, supported by advertising with options in artificial intelligence, autonomous driving through Waymo and other moonshots. As always, though, guys, these are called mega caps for a reason. Their impact on the broader markets is potentially huge, and it comes at a time when the appeal of holding treasuries is only rising. So that raises the bar a little bit for equities as a whole. But, of course, these names making up the biggest portion of that.
Dee, sometimes the wild cards out of at least the Alphabet print involve expenses. I wonder how closely you'll be looking for signs or clues about that, along with any kind of antitrust or DOJ concerns.
Yeah, so on the cost portion, I would say it's a wild card for both of them, right? They've been spending because to pay for generative AI, the compute power, it's very, very expensive. And that was really outlined last quarter. So if there is a surprise, it would be anything on top of that. We know that CapEx is rising. They have to build out their cloud infrastructure, servers, buy more of those expensive NVIDIA chips to support the generative AI push. And meanwhile, the monetization of that isn't seen for some time. So that is certainly a factor here. And if that is above and beyond what the street's expecting, that could hurt both of those stocks. In terms of antitrust, Carl and Sarah, I don't know what to say. It never moves the stock, even if the threat of it is getting closer and things are actually happening at the DOJ. And of course, there's that big outstanding tax bill for Microsoft. It's possible that the street has been complacent and will finally start to look at it, but hasn't so far. And I don't know that earnings is going to be really the catalyst.
We'll see.
They often don't say things about it.
Yeah, options implying a 5% move either way on Alphabet. We'll see what happens after the bell. Dee, thanks.